Consumers are being cautious. I would think that's due in large part to the stubborn inflation in this country. Doug Flynn joins us, certified financial planner, co-founder at Flynn Zito. I guess higher interest rates don't help either, but what did you make of,
That's right.
of this number?
Yeah, actually, if you remove auto sales from the numbers, the number was actually negative. So it does show that the consumer is weakening. And the problem is that they're 70% of the U.S. economy, as you know. So as that goes, as things weaken, that actually puts a plus in the column for the Fed to consider lowering rates because the economy is weakening and we're just waiting on the job growth to lighten up a little bit, and then they have everything they need. But that is happening. People are having a harder time, and mainly due to inflation and the cumulative effects of that, no question.
So if we talk about good news, bad news, by the way, I have to cut it short today, Doug, because I talked to Mike Breen for too long because I'd rather speak to him about basketball than you about inflation. But be that as it may, market looks like it'll be up a little bit, not much today, but again, to go back to the idea of cutting rates, that's the good news, bad news thing. This could be good on that front, no?
It is. I think it's more in the anticipation of that. I really wonder when they do start cutting rates if it's going to have any kind of positive effect on the market because we're anticipating it so much here for so long. And the market is extremely overvalued. The top companies are a really huge percentage. So starting to get concerned about that. Maybe we've gotten a little bit ahead of ourselves there. But it's definitely pulled ahead in terms of the market valuations. Things are high, no question.
Thank you, Doug. We appreciate it. Sorry to cut it a little bit short.